Welcome back to the Dividend Diplomats YouTube channel, guys. You've got Bert, the Hurt, and Lanny, the legends in dividend investing, the Dividend Diplomats, guys. And we're here to talk to you about one tech stock that is not purely based on the semiconductor chip industry over here, guys. That's actually doing very well. And is it a stock to buy right now?
Subscribe to the channel. Give this video a thumbs up. Also, we love our coffee. We keep tweeting about the coffee, Xing about the coffee, whatever it's called now. If you want one of the Dividend Diplomats coffee mugs, check that shop down there below. Well, we're pumped up, everybody. We're always tweeting about it because we love to hear about your coffee interests too. We don't just talk about dividend stocks over on X.
That is right. We are
That
here
is
on the
weird to
Dividend
say.
Diplomats. Yeah,
That
X is a little
is,
weird,
it
guys.
is
Guys,
weird.
let us know in the comments. Is X still weird for you to say versus Twitter? Let us know below. And also, if you guys follow us on Twitter but don't subscribe to this channel, hit that red button right now, guys. All right, so we're here talking about tech. No, it's not NVIDIA. No, we're actually not talking about Intel or Qualcomm or any other chip provider either. We're actually talking about an unsexy tech stock in Cisco. No, not the thong song, but Cisco, ticker symbol CSCO. Bert, you own this stock too, right?
I do, and we've scooped it up a few years ago too. And I mean, if you think about what Cisco does, it makes the hardware, but it's also huge in the cybersecurity. So for all the vulnerabilities that are out there, all the networks that are constantly dealing with crazy people, crazy hacking farms trying to penetrate their systems, Cisco is the major line of defense for so many of those companies, especially in corporate America.
Yeah, cloud storage, servers. They're involved in the, I guess, upswing of artificial intelligence or AI. So Cisco is definitely a part of AI. So don't get us wrong there. Just based on the big demand and the big swings that we've heard in the industry with, again, NVIDIA and AI, Cisco is definitely taking part in that. But they came out with their earnings release about a week ago, and wow, they tore
Ooh,
the cover off this ball. Bert, you
of
want to hit him
this,
with a of
my
that
little
that
stress
massive
ball.
baseball. Yeah,
Yeah.
stress balls. Yeah,
Well,
been popping a few of those lately.
yeah, let's do it though. Yeah, because they crushed it. Like they absolutely crushed it. Q4 revenue was 15.2 billion. It was up not 1%, not 2%, not 3%. It was 16%.
Ooh,
Management
16%, guys.
management put the barrel of the ball, the bat on the ball there for this quarter because they absolutely crushed it. Earnings per share were up 43%. Non-GAAP EPS was up 37%. Operating cash flow, man, if you thought those last percentages I told you were crazy, their operating cash flow was 6 billion, up 62%. 62%.
Yeah,
Insanity.
doing very well. Doing very well. Cisco's doing very well. They're up 16% this year, so it's no joke about that. And also, they expect for the whole fiscal year to be at about 57 billion, which would be up 11%. They've kind of given a little soft guidance for 2024, their fiscal year, to be only at between 57 and 58 billion, which is pretty much like flat. So that's very interesting given the sudden AI rush and AI boom. But maybe they're being super conservative. Maybe Cisco is taking that approach to under promise and over deliver to you. But Bert, you know what I love about Cisco? When you look at their financials, I bet you can take one guess, and it's not about how much revenue or earnings they have.
I'm guessing if you're talking about something like this, I'm gonna guess, and it's not banking, so
Not banking.
it's not banking. So we're gonna take out loan performance out of this because that would be where my mind would take me for banking. Guessing we're gonna take a journey to the balance sheet, and in
Let's journey to the
particular,
balance sheet. Bert, what is, since we're in this high cost, high interest rate, levered economy right now, what is that current ratio and quick ratio for Cisco, as well as the trend of the long-term debt?
remember we love seeing current ratios and quick ratios over 1x because that means that assets can at least cover the short-term liabilities. So their current ratio is 1.38x. Check right there. Go to the quick ratio. Let's back out that inventory there. So you get the same analysis. Assets minus inventory divided by current liabilities. 1.27x for the quick ratio. So both exceed that threshold that is so critical.
Yeah. And to just put a little bit of cherry on that, long-term debt is down almost $2 billion. So not up, it's down. And that is something we love to see here with Cisco. Again, ticker symbol is CSCO. So we're looking at the stock right now. We're going to put them through the dividend diplomats dividend stock screener. Price to earnings less than the S&P 500, payout ratio less than 60%, history of growing dividends. Last but not least, we'll look at the yield, stock prices as of August 21st.
Let's do it. Price 55.44, earnings per share 373, PE ratio 14.86, so a discount compared to the S&P 500 at the moment.
Slight discount, and based on a dividend per year right now of $1.56. Again, they only raised it about 3% this year. That payout ratio is so safe at 42%, right there in that Bert the Hurt perfect payout ratio spot.
Yeah, we're hitting the ball diamond today. Their 5-year dividend growth rate is 4.46%. They've increased that dividend for 11 consecutive years, so they're almost halfway towards becoming a dividend aristocrat. Let's keep going. Get that briefcase that's just dangling there above the ring and just grab it.
Money in the bank, guys. Now, since they've been doing it for 11 years, stock price has been up 16%. Probably means the dividend is going to be really low. It's not super low here with Cisco. It's at 2.81%, which is at least a full 100 basis points higher than the S&P 500. And some would argue about 120 basis points, which we mean 1.2% on top of what the S&P 500 is doing.
And look, it's not always about the yield. That's why it's a bonus metric and it's not a core metric of our screener. Here, right, we want to make sure the yield's solid and above the S&P 500, but we don't go chasing the yield. And we're going to make sure we consider all the stocks as well.
Don't worry, I will not sing Don't Go Chasing Dividend song by T.L. Bird.
Please, you can do a mashup between that and the thong song here while we're doing the Cisco analysis.
Please, no, hold me back. Hold me back.
All right. So let's summarize them quickly. PE ratio is almost 15, payout ratio is 41%, 5-year dividend growth rate is 4.46%. They've increased it for 11 years and their yield is 2.81%. Lanny, one quick thing we forgot to note, how does their dividend yield compare to their 5-year yield?
It's actually lower by 14 basis points right now, and that's more than likely all due to that share price increase of 16%, outpacing the dividend increase so far here in 2023. But guys, this is a great stock. Passes all the dividend diplomat stock metrics, albeit we wish the dividend growth rate was just a smidge higher here to really round out that factor. But Bert, $55 a share. What are you thinking right now for Cisco? And I'll give you my feedback as well.
I mean, hey, I'm not looking to add to Cisco right now, but we just talked about 2 stocks from my portfolio. There are a few others I want to add in there. But overall, honestly, though, when you're looking for a quality tech stock and you're looking for a quality company, Cisco's got to be at the top of the list in the technology sector. What are your thoughts, Lanny?
Yeah, I mean, you pay for quality, and I think that's what people are probably buying right now. Not just quality, but like, hey, there's future outlook performance based on AI. Obviously, I'm stubborn. I'm Italian. Yes, Bert, throwing the joke.
I had no idea you were Italian, Lanny. That is news to me.
Now, they were at again, it's going to sound so stupid because they were at this, obviously earlier in the year, but if they drop down below 50 and that yield swelled up to about 3% plus, I'd rank them higher on my dividend stock watch list to maybe add a couple of shares.
I think that's fair. 3% is a good point for you to keep adding to Cisco. Everyone, let us know what you think about Cisco. Do you have a price point in mind for where you would buy the company? Do you agree with Lanny's $50 3% yield mark? Let us know down there in that comment section below.
Guys, if you haven't, again, subscribe to this channel because we're trying to reach to 20,000 by the year. And we're at almost 18,000 right now. Guys, let us know what you think about Cisco, please.
Yeah, and Lanny, since you're Italian, I think there's something you need to tell the people first, too, before we
go. Oh, I'll tell them. I'll tell you, Johnny. No, I'm kidding. If you're not with us, you're against us, Jack. That was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.